What's up, everybody? Welcome back to the channel. Thanks again for joining me. Today I'm gonna teach you guys how you can tell if a company has been basically shorted to the moon. And I thought this would be a really cool concept video, only because of all the craziness that's going on. And I've highlighted a couple stocks here that we're gonna go over. Now, I am in no way a financial advisor, so I'm not giving you any advice here. This is just for me to kind of show you how I read charts. So yeah, this is for fun. It's not for actual financial advice purposes. So take that with what it is, and let's get into it. All right, guys. So unless you've been living under a rock or just don't have internet access, you probably have heard about Gamestop and AMC and Nokia and Blackberry and all these stocks, and people just going wild and crazy for them. And then how there's a battle against shorters or hedge fund shorters, right? So I thought that it would be a cool idea to show you how people come to these conclusions, and it's really easy. And yeah, I'm just going to go over 4 different stocks and show you which ones actually have the high shorters and which ones are still shorted, but not to the degree at which they are getting invested in. So we're going to start with the big daddy. We're going to start with GameStop. This is the one in all the news. This is the one that Wall Street Bets is going crazy for. And we're going to just look at a few things here, okay? So number one, we're going to scroll down here. This is the Market Watch website. I love them, by the way. Very cool website. You can get a lot of information from here, okay? Wow, look at this, guys. 1 year growth, 8,000%. Jesus. Okay. Sorry, I had to take a mental look at that, and it just blew me away. Okay, so first we're just going to kind of go over the key data. So the key data is very important in understanding, what's happening with this stock. So obviously it opened at 379. It's definitely nowhere near that. It's 313 after hours trading. It ranged anywhere from 250 to 413. This is extreme volatility. This is insane. The stock moved from 250 to 413 in a day. That's wild. 52-week range. Could you imagine if you bought this when it was 257 and now got up to 483? It's wild. Market cap, the total worth of the company, the value of all the stocks combined right now is $22.67 billion. Okay. Now this is where it's going to get interesting. Okay. So I'm going to basically kind of pretty much tell you about there's 4 things here that we're going to talk about that are going to be important to understand. Okay. So shares outstanding. This is the total amount of shares that the company has, and this is shares that insiders hold, that you and I would hold if we were investing in GameStop. Just everything combined, right? It's the total of the stock price plus times the shares outstanding equals the market cap. Okay, so this is what everything that the shares have been released for the company. Now the public float is how many we can trade as consumers, right? So out of 69.75 million shares outstanding, the public float is 51.03 million. So there's 51.03 million shares available to trade publicly, buying and selling. So there's a pretty big difference here. What is this? 18, probably around 18 million-ish shares that are internal. They're they're employee shares, or they're traded to certain groups to where they can't be traded between me and you. So that's something we need to keep in mind. So remember, out of 69 million total shares here, 51 million are available to trade. So that's one thing. Now the other things we need to look at are the percent of float shorted. Okay, so the float is 51 million shares, right? The percent of that float that's being shorted is 121%. And this is probably what people have been looking at in the news. They say, okay, well, they're over 100% of shares. That's because you can actually get over 100% of short. You can short a stock over 100% because I can give it to some, but I can borrow it, and then someone else can borrow it from me, and then they could do the short and then give it back to the other person. Now, one share has literally turned into 2. So basically, 51.03 times 121.07% should equal the short interest, right? So essentially, you're looking at just a ton of shorted shares at this point. And this is why this stock was targeted, because it's over 100% of 51 million float, right? So this is just extremely lucrative as far as getting in. And the thing is, if the stock goes up, these shorts, they have to cover this. They have to be able to pay back, or at least they got to be able to make money off their shorts. If they don't, they have to pay whatever the difference was when they give the stock back. So at the end of the day, this is kind of what I wanted to go over again. So once again, 69.75 total shares outstanding. Okay, 51 million total available to us. Right, out of the 51 million, 121% of them are shorted. So they've been shorted by a short or a hedge fund or like somebody shorting stock, and this is the short interest, right? And 115.21 as of 115.21. This is actually old data. But this is just to give you kind of an idea of what's happening. So yes, GameStop, extremely shorted, okay? Still hasn't even hit 100%. It's not even dipped below 100%. So this is still very lucrative. If the shorts don't clear by the time that they need to give their stocks back, they're going to have to pay, which is going to drive the stock price up. They have to buy. Now, the problem with that is somebody has to sell, which is why you hear all these people say hold, right? So keep that in mind. All right. Onwards to AMC, because AMC is the other one, right? Like that's the other big one that everybody talks about. They go, oh, get AMC, hold it, right? So let's look at AMC. Let's use that same logic for AMC and see what we're dealing with here, okay? So AMC's market cap, $4.5 billion, nowhere near the $22 billion that GameStop has, right? So it's maybe like a fifth of what GameStop is. A lot more shares, though. So they have 287.28 million outstanding shares, but only 56 million of them, 56.57 million are available to me and you. So this is kind of interesting. I'd be interested to know, where these shares are. We obviously don't have that data because, we just get whatever we have, but I'm sure someone has that data and someone's probably buying it with a lot of money. So keep that in mind. So the public float on this one's 56.57 million. Okay, I'm going to talk about beta here in a second too, but let's see what the short interest is. So short interest is 44.67 million. So it's not even 100% of the float, right? Which means it's 78.9%. So out of 56.57 million public float shares, or shares that are available for trade, the shorts are only shorting 44.67 million of them as of the 15th. This has probably went up. I wish I had better data, but this is older data. But this gives you an idea, right? So AMC is definitely not shorted as much as GameStop. But they have 44 million shares compared to 61 million at GameStop that are shorted. So keep that in mind. So the shorts here don't have to cover as much. But like I said, 78% is still really high. Like you don't want to get in trouble here. Now, I kind of just saw this. I want to talk about the beta. So the beta is a judgment of market volatility. When the beta is actually higher than 1.0, it can mean that the stock's a lot more volatile. Right? And I'm actually kind of curious what GameStop. That's kind of interesting. Well, I can tell you that GameStop's volatile. I don't know why it's a 0.89 beta. That doesn't make any sense. But if you see the beta go above 1, usually the higher it goes above 1, the higher the volatility of the stock. So maybe there's just more stuff going on right now with AMC, like more trades. I don't know. That could be it. Volume 602.19 million. Let's see. Oh, yeah. It's the trade volume. They're going off the trade volume. So obviously 50 million is the volume for the day here. Versus AMC, which is 602.19 million volume. So that's why the volume's really high. The trade volume is really high. That's why the volatility is through the roof. So, yeah. Anyways, so those are the two big daddy stocks, guys. Like those are the ones that people are going wild for. And this is why Wall Street Bets is like all over, right? They're telling people, yeah, I love this stock. It's a great opportunity, and they're not wrong. I mean, as long as the stock goes up, the shorts got to cover. They're gonna make money. I mean, this is easy to read if you know what you're looking at. But okay, so let's look at the other two stocks that people don't really look into too much. So let's look at Nokia first. I know everybody's like, hold Nokia. And same thing with Blackberry, right? Like people are telling everybody, hold Blackberry, right? These are like things you see all over the forums along with GameStop and whatnot. So let's look at Nokia. Nokia's a little different. So their trade volume, 362 million. They should have a high beta or at least close to 1. So not bad. So let's take a look here. So current outstanding shares, they have 5.65 billion shares. Ton of shares. 5.62 billion of this are publicly available. So that makes sense because like it takes a lot to give your your insiders like 1 billion shares. That's a lot of shares. So let's see what we got here. So I'll probably go over the PE ratio and all this stuff here as well. But let's okay. So let's see here. So short interest, 59.55 million shares. So if you got to think, out of 5.62 billion shares, the shorts are only shorting 59 million, which is a lot of shares, but it's only 1% of all shares are being shorted, guys. So, as far as Nokia is concerned, it's actually good. It's actually good according to analysts, and the reason is because shorts aren't even shorting the stock. It's at 1% of all shares are being shorted here. So think about that, guys. Think about the amount of shorts that are being shorted here, and compared to like GameStop and AMC, right? So let's remember that. Now, the next thing I want to do is talk about Blackberry. I think this is a little bit different. Let's see what we got with Blackberry. All right, guys. So Blackberry, okay. Blackberry has 562 million shares outstanding, which 553 million of which can be used for public trade. Beta is kind of high, so it's a lot more volatile. Let's take a look here. 7% of these 553 million shares are shorted. So 43.49 million shares are shorted, or basically are being shorted at this point. So when you look at these stocks and you want to understand, if they're going to be going down or if the shorts are betting against them, that's all you have to do. You just go here, you look, come on, there we go. You look at the shares outstanding and the public float. So the public float is how much of the total shares available to public. So this is really what we want to look at, the public float, right? With the public float, you can see what the short interest is. And if the short interest is above the public float or near the public float, it's going to give you the float shorted percentage. And the higher the percentage, the more shorts or the more people who are shorting it, right? So I hope you guys understand that. I just wanted to make that clear for everybody. Just give you some insight on why people are shorting stocks or why people are trading in certain stocks and telling you to buy certain stocks over other ones. And really, honestly, all these other stocks, like I will say this, here's my opinions. GameStop, pretty expensive to get in now. High short interest though. So this is a legit shorted stock. This is a legit shorted stock. Nokia is not a shorted stock, but I will say this. Nokia is a really good investment, and I will say this, I have a call in Nokia, but it's because earnings are coming up, and I believe that they're going to actually raise the stock value when you hear the earnings. There's a reason why this is over, right? It's not a strong buy, but it's basically a buy, and it's a 1% float short, right? Like the shorts don't believe this stock is going to do bad. This is an indicator that shorts don't believe the stock sucks. Okay, if the short percentage is low, shorts don't believe that this is a shorted stock. So keep that in mind, and let's take a look at Blackberry while we're at it. No, people don't like Blackberry at all. Well, it's because the float percentage is 7%, which isn't super bad, but it's not 1%. We'll just say that. So anyways, guys, that's the video. I hope that it was educational. I hope you guys understand, why things are happening with certain stocks and not other stocks. If you guys have any questions, leave them in the comments below. Don't forget to hit the like and subscribe. Hit the notification bell for all updates on new videos and things like that. Don't forget to refer me to your friends, share the video. It's a good educational video, and I think it would help a lot of people understand what's going on. With that being said, guys, it is late. I'm going to go to bed. I will catch you guys in the next one. Peace.